Good morning, traders. This is John with StockStrategyCircle.com. Just wanted to give you a quick update about one of the stocks we had recommended about a month ago. Gambling.com, Group Limited. We had put a buy alert on this stock when it was back down around $12.97. It looked like it had begun to consolidate a little and that a breakout was imminent. As of this morning, that stock is up 19% as I'm talking right now. They just announced that they're going to buy out one of their competitors and that as soon as the deal closes, it's actually going to be accretive to their earnings. So that's pretty cool. One of the interesting things about trading the stock market is once you learn how to read the price charts, you can almost kind of tell when there's insider activity, and maybe not even insider is not the right word, but when there's market manipulation activity going on. You don't necessarily know what is going on, but it's pretty easy to know that something is going on. I had no idea that they were working on this deal, but now that I go back and look at the price chart, it's kind of obvious that something was going on and somebody knew something. And so that announcement was made today. What is so interesting about gambling.com and the reason why we were looking at it in the first place is that in general, you want to buy companies that are growth stocks. These are going to be companies that actually have a potential to increase their earnings. In addition to that, we try and focus on stocks that have a low float. That is a low amount of shares that are available to actually purchase. And the reason we do that is that stocks trade on a supply and demand fundamental. Unlike futures contracts where you can create an unlimited amount of contracts, that's really not the case with stocks. Generally speaking, as long as there's no illegal shenanigans going on, if a stock has 16 million available shares, then that's all there is to buy. And so once those shares get bought up, anybody who wants to buy more of that stock is going to have to bid the price up until the holders of the stock decide to sell it off. It's very basic how it works. There's also short sellers, but as long as everybody follows the rules, even if there's a whole lot of short sellers, if a company is a growth stock, once the actual float is bought up, eventually the short sellers have to close their positions. Even if the company is a total basket case like we've seen in the past with certain companies, GameStop as an example. I mean, that thing just took off even though it was wildly shorted and eventually you made phenomenal gains regardless of what happened with the short positions, even though that is a company that has like zero growth potential. So if you focus on companies that actually have growth potential, that actually have earnings, you really don't have to worry so much about the short sellers because it doesn't matter, because as long as the business model holds out, eventually they're going to have to close out anyway. And so the most important thing is the float. And so you'll see that, as an example on a stock like gambling.com, which just clicked to be 20% up while we were talking, back down to 19.87. The reason you get these huge moves is because when the general public is pointed in the direction of, hey, look at this company, there's just not that much stock available to buy. And because of that, the price takes off. Congratulations for my subscribers. You were told about this approximately a month ago, and so you have a nice win. Maybe you can take a little bit off the table, or maybe you let it ride. We will see. But as of today, the fundamental picture actually just got better for this stock.